Hi friends, I'm back with one more video. As I've promised you, I'll be making an adjustments video on the debit spread. So this is my debit spread end-to-end series, right? Playlist. In part one, okay. This is part one. In part one, I've told you that I'll come up with series of videos wherein I'll cover. I'll try to show you like different adjustments what we can do. So today we are just going to cover the strangle part. Okay. So the subject here is if the market view goes wrong, right? How to log the profit or how to reduce the max loss. So today we will cover this particular topic, strangle, right? What will happen in case if we convert the debit spread to strangle? How can we mitigate the loss? Okay, so I'll take you to Obstra. I've taken the latest expiry, which was last week expiry, 7th. So I'll be deploying the trade on 7th. Right, this is the latest expiry in the bank Nifty. Okay, so looking at the chart itself, so this is the seventh, right? So when I've deployed the debit spread, let's say on 7th, looking at the graph, looking at the what do we say, the market nature, looking at the green candles and everything, so it is clearly a sideways range, right? Starting from 7th till 13th, it was more or less in a range. So the purpose of debit spread, the reason why we go for debit spread is, I mean, the market should be like in a momentum, because it is a pure debit spread, so we need momentum. But looking at the last week expiry, it is more or less a sideways, so definitely we would end up into loss. Okay, but let me show you by a simulation. So I've deployed a debit spread, okay, 13th April. Okay, I bought a leg at 38,200. Okay, this was my bought leg, and I've sold a one more buy leg to make it a debit spread. So I'm not going to discuss about the debit spread logic, because if you want to know the debit spread logic, you can just visit my YouTube channel. So wherein I've just given you the entire, so what is the debit spread, okay, the logic, how to calculate the maximum profit, maximum loss, or what is the best time to deploy. So just refer this video, debit spread part 1 and part 2. All right, let me take you to Obsta. So I've deployed a debit spread. Okay, this has a loss of 3,130 and a potential profit of 9,370. Okay, 9,370, 3,130. It's almost like 1 is to 3. All right. So let's say you have deployed this trade at 3 o'clock on 7th. Okay, on the 7th of April at 3 o'clock, you have deployed this trade. So let's see how the trade performed for that particular expiry. I'll not do any adjustment. I'll just take you like one next day, right? From 7th, if we go to 8th, it add a profit of 436. I'm just simulating it to go to 11th. It made a loss of 1,258 because your market is standing in this red area. It is not moving up. Let's go to next day, that is on 13th, 12th of April. So you have a loss of 2,187 because the market is still in your red zone. Let me take you to one more day. It's almost like 13th of April expiry day, right? You made a loss of 3,122. That is like almost your maximum loss at 3 p.m. on the expiry day, right? So you are making a loss of 3,122. If you do not do any adjustments, you'll end up into the maximum loss. Let me take you to back to 7th, and let's try to do the adjustments. Okay, at 7th we have deployed the trade at 3 o'clock. More of it, there is a not no time constraint, but what we do is like on the expiry day, right, after 2 o'clock to 3 o'clock market will be volatile, so we can deploy this trade at 3 o'clock or 3:10, 3:20. It's up to you. So I've deployed this trade at 3 o'clock, right? The loss is 3,130 and the profit. Okay, right? So now there is a small mathematic logic. So whenever, see friends, we bought a leg for 38,200 by giving a premium of 244, and in line to that we sold a deep OTM 38,700 by taking the 120 premium. So we are giving 244 premium for the bought leg, and we are receiving 1,020 for the sold legs, right? So now whenever your buy leg, the premium starts reducing, it clearly shows that the market is going downwards, right? But you have deployed this trade with a bullish view. But let's say if this premium starts melting, right, from 244, it comes to 200 or 180, 160, it clearly shows that market is going down. which is against your view. So there is a small, uh, I mean, look, I mean, we have to do some sort of adjustments, right? So when exactly we need to do the adjustment is like 244 is the premium you paid and 120 is the premium you have received, right? So what is the difference, right? Net you see 244 minus 120 would be 124, right? So whenever this buy positions premium becomes 124 or 126 or 128, maybe between like 124 to 130, so then you have to start doing the adjustment. So rather than telling you in the theory, so let me just take you to the practical way, right? So my focus would be, as we all know, this trade on the expiry is giving a loss of almost like 3130. So now how to mitigate this loss should be our plan. Okay, forget about this profit, because we have seen market was sideways, right? We need to mitigate this loss. All right, so now my condition would be the moment this 244 becomes 124 or 130, so then the actual adjustment starts. Okay, I'll just open this PLN. So just keep watching this particular buy leg. The moment it becomes 124 or 130, so then we need to start doing the adjustments. I'll go 30 minutes. Okay, this is almost the end of the day. Okay, this is the next day. It's still 225. It's giving a minor loss. Now again it is giving a profit. Let me quickly go. Just keep a eye. This should not become 124, right? Though we are having a loss, but the adjustments will start only when the market becomes 124. Sorry, the current price of this bot leg becomes between 124 to 130. Okay, so I'll quickly go 250. We are in profit. We're in profit. All right, almost close of the day on the 8th. Okay, almost end of the day, 257. We are making a profit of 448. Right now we landed up into 11th of April at 9:30. Still, see, it is almost close to 130. All right, so we have to be alert now, because if you start looking at the loss has already started. We bought the leg at 244, but now the current price is like 131. So that's the reason we started seeing the loss. Okay, so the best way would be to do the adjustments right away, because we are only 6 points away. So what I'll do is like to see now we have to convert this into triangle. This is a debit spread, so I'll show you like how to convert this to triangle. The first thing what you have to do is you have to exit this leg. Exit in the sense you have to square up this leg with a loss of 2817. Okay, so now the premium is like 131. Okay, I'm just exiting this to 132. Okay, see, when I exit this, look at the payoff. Okay, now this has only your sold position, call sold position 38,700, because we have just squared off this particular leg. Now to convert this to strangle, right, you all know, right, strangle. So we have a sold legs call, so we have to just sell a put leg to make this as a strangle. All right, so whenever we sell one more put leg, so this will become a strangle. Strangle is like we will buy one OTM call, or sorry, we will sell one OTM call option, and then in line to that we will select OTM put option. But to convert this to strangle, okay, so we have to sell a put leg. Okay, let me come back to profit and loss. So what strike we need to sell? Okay, so we have squared off this entire leg. The premium of call sold leg is 46.3. So we have to just ensure that we are selling a put leg close to this 46, not exactly 46, maybe like 80 to 90% or 70 to 80% of the premium worth put leg we need to sell. So I'll just go to option sell, make a note of this 46. So we have to sell a call, sorry, we have to sell the put close to this premium. Okay, 46. I'll go to option chain. Okay, so I'll look out for 46 premium. Okay, so I do not have C40, so I'll be selling this put. Okay, I'll sell one quantity. Friends, this video will extend because I need to explain you the entire logic. Okay, so now the moment I sell the put, so this has become your triangle. I think all are aware of this triangle. All right, This has become a typical strangle with a potential profit of 1265, and you have a good range. Basically, you have almost like 350,500 range in the bank nifty. Okay, so now you have one sold call and one sold put that would create this triangle. So now you are into this triangle. Okay, let me take you to the PLN box. Now you know, right, this triangle adjustments. Okay, so you have to basically match the premium or in terms of delta. Okay, but this time we'll just go through the premium. So we have to just ensure that we're matching this premium. If any of the premium, right, goes like 50%, if it reduced 50%, or if this uh, uh, goes like 50 or 60% above this price, so then we have to start doing the adjustments. Okay, so now 46, I'll just move to 30 minutes. We are at starting of the market at 11th April. So just keep an eye on this premium. Okay, so there is not much deviation, right? 60 and 32, friends, I think we have to do the adjustments, because see, this is almost made a deviation of 50%. This is 60 and this is almost 30. So I think we have to do the adjustments. Loss is 1026. So now what we have to do is like we have to do the typical strangle management. So if you want me to prepare a strangle management video, I'll prepare another video. So I cannot explain you the strangle management, because if not, the video will become lengthy. So now what I will do is like I will just exit this leg, right? I'll exit this leg for 32. Okay, right? And then I have to sell one more PE close to the premium of call leg 60. So I have to sell a premium of 60 for the put side. I'll just go to the this thing 60. So this is the closest one. I'll sell this uh, put. Okay. So when I sell this put, you know, right? If you look at the payoff chart again, we will be converting it to strangle, right? With the market in the center. Okay, and we have uh, coverage on both upside and downside. If you look at the range, this still has a very good range. So friends, try to understand, we are trying to mitigate the loss, right? We are trying to mitigate the loss because we have deployed the debit spread with a view of bullish, but market, but our view went wrong. So now we wanted to mitigate the loss of the original debit spread, which was like 3200. Okay, so now we are at the loss of 1010. So when we did the second adjustments, now the potential profit has increased from 1200 to one, so close to 2000, right? Let me take you back to the so now we have to just keep a check on this two premium. So we have to balance this premium. Okay, I'll take you 75 45, I think it's more or less balanced. 6350, more or less balanced. 6250 46, more or less balanced. Okay, 68 and 40, okay, we can do the adjustment, but still it's more or less balanced, right? 54 46, more or less balanced. 70 37. So I think we have to do one adjustments because it is almost close of the day. So let's do the adjustments. If you take the risk of not doing the adjustments, I mean, though we have a loss of 766, but if there is a bigger moment, I think this both the premiums are not balanced, right? If either of the market goes up or goes down, so because of the imbalance, you will start seeing more of loss. Let's stick to the rule. Okay, let's stick to the rule and do the adjustments. Now I'll square up this PE for 37 rupees. Okay, 37 rupees. And you know, right now we have to sell a PE worth close to 70 premium, not more than 70, but maybe it's 80 to 90% of the premium. So we squared up this put. I'll sell a put close to 70 rupees. Okay, 70 65. So we can just go for 65. I'll sell this put. And by this time, you should know, right? So this will convert again back to strangle with this current market price in the middle of this triangle with a good range. Still you have a good range, right? You have a good range of 1000 plus. Okay, and we are at the loss only at we are at loss of 768. Okay, our goal is to mitigate this loss, friends, not to get into profit, because in a week you cannot have two different views. Initially you started with debit spread, right? When your market view went wrong, you need to just mitigate the loss and not uh, think in terms of getting into profit, because you cannot have two different views. Okay, so now again I'll go back to profit and loss. Our loss is 768. So now we need to keep a check on these two premiums, 70 and 65. Okay, more or less balanced, 65 and 61, 47, 77. It's okay. So keep and check. We are at the close of we are at 2:30 on the 11th of April. We have 2 more days to expiry. Okay, 48 and 65. We are good. So check the loss here. It came down to minus 215. Okay, 3 o'clock, 30 and 90. So now we have to do the adjustments, because if we hold this trade for the next day for the overnight, right, right, this premium is only 30 and this premium is 90, 91. So delta would be like I mean delta would differ, and whenever if there is a huge gap up or gap down, so you will end up seeing losses, right? So best time for us to do the adjustments. Okay, this time I'll just square off the call. So whichever premium is less, so we need to square off that particular leg. So throughout the adjustments we have squared off the put leg, but now we have to square off the call, because this is at lower premium. So 119 we will sell at 30. This is the call, right? We are going to square off 30, and now we have to sell a call worth 91 premium, close to 91 premium, which is the put premium. Okay, I'll go to option chain. So this time I have to sell the call close to 91. Okay, so we have 84. We can just sell this, and by this time, this will again convert back to your strangle. This is a strangle with still you have the good range, right? 840 and 500. So 205, almost 700 range with a loss of only 396. All right, so let me take you back to profit and loss. So we need to check this two legs, 91 and 84. We're almost at the close of the. So this, I mean, we have to just balance the premium, or you can say also delta, right? I'll go to 330, right? More or less balanced, right? Now the entire loss has become to profit now. Okay. Do you remember the original debit spread at the loss of 3000? So friends, there is one call out here, right? So we have made our trade to zero with a profit of 150. So if required, you can just exit the trade. I've told you, right? The basic purpose of converting the debit spread to strangle is to mitigate the loss. So now your loss has been completely mitigated, and you are at 150 rupees profit. With the brokerage charges, you can just exit, right? If you are very aggressive, if you want to play because we have a good range over here, you can just continue with the trade for another 2 days, because expiry is 13th. You have like 2 more days. So let's see what happens, but I will exit this trade at this moment. I don't want to take more risk because I've saved my capital, right? And moreover, I'm just getting with 150 profit, which I can just give this for the brokerages charges. Okay, so we are at the close. Let me go to the next day. All right. See, friends. Though we are seeing good profit here, right? From 150, the next day we are seeing a profit of 1,332, but the premiums are imbalanced, right? This is at 26 and this is at 80. So now at 9:30, 9:45, what we have to do is we have to just exit this call, because this is at the lower premium, right? We are booking this profit. Okay. 84, I'll book it at 26, right? 26, and now even you can exit on this day, because your loss has been mitigated, and moreover you got into good profit, 1342 on the capital of 20,000. It's like almost like 7 to 8% of your profit, right? You can even exit on the starting of the 12th April, but still you are aggressive enough if you want to just play with the market, right? So we have squared off this particular leg, right? 84 we have squared off for 26. That's what we did, right? 26 we have squared off, and now I will sell call worth 80 rupees premium, because my put premium is standing at 80 rupees. Okay, I have to sell one call at 80. Okay, so I will sell, because this is, we should not be going like behind the premium, so I'll sell this call. Okay, so when I sell this call, so this has again converted to triangle. All right, with the market in the center of this triangle, you have good range 800, right? 200 plus 2, you have the 400, but still you can make a call. You can either exit the trade with 1342, but if you want to explore, or if you are aggressive, then you can just go with this trade. Okay, I'll again go back to profit and loss. So I will keep a check on these two premiums. I have to balance the premium. Okay, 79 and 65. Okay, 102.50. See, now there is almost 50% deviation between the put premium and call premium, right? Your profit is at 1097. So by this time again we have to just exit this call at 52. Okay, I'll exit this call at 52. So I'll sell one more call close to 102. Okay, 102. So I do not have 102. I'll sell this. Okay, we should not be going behind the call. I'll sell this call. Okay, so now we have to just keep a check on these two premiums. Try to balance it. We are a profit of 1097. Okay, I'll go to 30 minutes. 82, 102, more or less balanced. Okay, 83.94 balanced. Your profit has increased to 1400. Okay, let me see. Okay, I'll make it big. Okay, so now 65 and 112, right? So we are on 12. So if required, you can do the adjustments, because this is like almost right close to 50% of the deviation. Okay, so let me just give it a try, give it a chance. Right, 61, 107. Right, we can take a chance. 56, 109. Right, I think here we need to do the adjustment. So let's do the adjustment. So I'll square off the p, because this is a reduced premium, right? So 56, I'll close at 56. Okay, so this 65 premium, what is that? This 65 worth, I'll close it 56.85. Okay, 56. And then right, we have to sell a put of premium 109 matching the call. I'll go for put 109. Where is 109? Right, so we know it, so I'll sell this. Okay, so when we do this, again this will convert to strangle with the market in the center. Looking at the coverage, right, you have almost, I mean, see, as and when we are approaching close to the expiry, right, the strangle range will start reducing. So even you have a chance to exit at almost 1766 on a capital of original debit spread. This is almost like 10%. I mean, close to recap. The original debit spread was giving a loss of 3,122, which is almost like 16% of the capital deployed for the debit spread. But by doing the adjustments, we nullified, I mean, we almost mitigated the loss of 16%, and in return, we got off with almost 1,700, which is like close to 9 to 10% on the capital deployed. Okay, I'll not do the full simulation because it might take time. So I'll just leave it to you. So in case if you want to do the simulation till the expiry, you can just go ahead and do it. But my intention, the purpose of making this video, and as a trader, if my view goes wrong, so I will be mitigating this loss. I'll not even think about the profit, right? My only goal would be to mitigate this loss. This loss is like almost 16% on the capital deployed on the debit spread. The moment I mitigate this loss to zero, or even if this loss shows like 300, 500, 1000, I'll exit from the trade, but I'll not look out for the profit. The reason why I had the simulation of till like 1700 or 1800 is like I wanted to show you like how we can convert the loss making debit spread to even profit. But maybe the week which I might have taken might have worked out, but the market structure, right, it is very volatile. So in case of high moment or high momentum on the downside, we might end up again into loss. So preserving capital is very important. So the video was to mitigate this loss. So we have mitigated this loss, and in fact we came up with 10% of the profit by nullifying the 16% of the profit on the capital deployed. So friends, this is one of the I would say this is one of the adjustments wherein the loss making trade, especially in the debit spread, can be managed by doing the adjustments, and that adjustment is converting your debit spread to strangle. All right, so friends, please subscribe my channel and share with your friends. This basically requires some effort in terms of coming up with all these videos, and uh, believe me, friends, I have other adjustments. So I'll come up with the other adjustments. So I need some motivation from you guys. I mean, luckily, within like 1 month of time, I've crossed the three-digit subscriber. So I've achieved the 100. So now currently my YouTube channel has like 103 subscribers. So let's see how it goes. But please start sharing with your friends and start subscribing. And thank you for watching my video. So I'll definitely come out with other adjustments as I've promised. All right. Thank you. Thank you for watching.